The last 2 weeks have seen the release of several grain reports, which were followed by big gains in the price for grains. Joining us now with this week's Bottom Line is Neil Melancon. And Neil, apparently while we were in Portales, prices jumped.
Yeah, they did jump up on us, Mike, sparked by disappointing yield numbers and positive export reports. Many crops are reaching record highs, and even though many factors are involved in these high prices, the October USDA crop report started the run we've seen lately. Corn was the big bombshell, confirming fears of a lower production than expected. As you can see, the yield per acre was far lower than the trade expected and have caused corn to hover near the $6 a bushel mark. Beans, meanwhile, had a fairly neutral report, but export figures that are double and sometimes triple what they were last year have buoyed prices to two-year highs. In fact, 1 week in October had the largest single week of bean sales in history. The bottom line here is that grain prices have had little to stop them in recent weeks. A Federal Reserve plan has boosted the U.S. dollar, which has put the brakes on some of these sweeping prices, but it's likely to be temporary as trade expectations are for more disappointing yield numbers in the November crop report, especially for corn. Cotton has joined the grains in seeing record high prices at $1.25 per pound at one point last week. All of these factors combined, Mike, mean a heated acreage battle once planting begins this spring.
And Neil, of course, higher price is certainly great for farmers, but what's this going to do to consumer prices out there right now?
Well, we heard from Bob Ellison earlier about them being fairly stable, and that's the good news here. As we've talked about before, there's a shelf on prices that insulates food prices from these fluctuations. The bad news, though, is that there will be indirect problems as a result. For one, expensive grains means expensive beef at a time when there's a smaller livestock herd in the nation, and even though feedlots are full, traders are aware of these factors, which is keeping the market inflated. Second, the higher prices for cotton will hit consumers at the retail level for things like T-shirts and jeans, especially when China will have to buy more expensive textiles.
Neil Melancon, great report. Thanks. And remember, you can listen to any of Neil's reports on the Louisiana Farm Bureau radio network by clicking on over to our website, twilatv.org. There you'll find a list of stations where you can listen in. Just look for the link called LFB Radio on the right side of the home page.